Good afternoon. George Cavaligos for HFT Bonds and Notes. Auctions, supply, supply, supply. Obviously the focus and the fear. The 10-year auction actually didn't go as well as I thought we'd see. I think Ricky gave the C- grade, and he said he was being generous to the auction. Bit surprised, you got all these Fed buys. Today was not a Fed buy. They're only going on a 4-day work week in April so far for some reason, but tomorrow they'll be buying 7 to 10 years. And the bond auction tomorrow. Typically we see some kind of a bottom on the bond auction. Some signs pointing in that area. Volume increased today on the downtick. We took out last Friday's lows in the bonds. I think we probably stopped out a bunch of longs. And you guys that have seen me in the webinars that are on our hamsyanalytics.com website, if you've watched any of the pre-non-farm payroll webinars that we do, I talk frequently about the Wall Street Journal's measurements of buying on weakness and selling on strength. And they look at all the listed stocks and ETFs that trade on the New York Stock Exchange and rank them based on buying on upticks or selling on downticks. And if you look at the buying on weakness list today with, I don't know, a couple minutes before the equity close, 5 of the top 10 stocks or ETFs making the buying on weakness list today are bond related. TLT, Total Return Fund, SHI, I can't remember all of them, but 5 of the top 10 buying on weakness positions today were bond related. I think you guys have watched this video and have checked out my webinars and are in the chat room. You guys know that there's some kind of a stat, and I never really researched this deeply. I probably should. But if you go back over the last 3-4 years that we've gone to, no, it's not that long, but maybe 2 years that we've gone, 3 years that we've gone to the monthly bond auctions, the stat is ridiculous. I think it says if you buy the bond auction on the Thursday afternoon and sold it 24 hours later, Friday at noon or whatever, you've lost money, I think, once or twice. Some crazy number, like 34 out of 36 times. If you bought the bonds in the auction, sold it 24 hours later, you made money. That's amazing. But makes sense. Dealers are having their way with things. You notice how they push the market back here. We talked about this last week, on Friday, and then on Monday how we thought the market would back up into these auctions, and it's done that. And it's kind of surprising that it hasn't produced some better auctions yet, but tomorrow's the key. The 30-year auction tomorrow is the biggie, and I tried to do some bottom fishing today, keeping it very small again. I think I had 2 trades, 2 small losers. Nothing we need to hold a bake sale for George for or anything like that. Tomorrow I might get a little more aggressive on the dips here. We're coming up on some key support areas. Right here at today's lows, we're bumping up against the 61% fib retracements of this last rally. These are big levels on, the last couple months. We've talked about the Fibonacci retracements, how 61% has worked very, very well. Problem is, this isn't 61% of the whole rally that we've been going through over the last, 2.5 months, roughly, 1 month. From the lows, we're not even doing a 382 retracement yet. So there is some risk, but we'll try to buy, the auction tomorrow. We'll hopefully be buying off of a support area, and we'll take a look at a fairly tight stop maybe. You don't want to give it too much room as we're bottom fishing here. Bottom fishers usually end up with, what's the old saying, stinky fingers. We don't want stinky fingers. We want to make some money. So sell rallies until the auction, buy dips into the auction, and hopefully we'll be buying them against some fairly important support levels. We've got a bunch of old highs popping up down here in the 10-year, 132.08 to 12. There's a bunch of old highs there. And the bonds, we got a little bit further down before we hit those same kind of levels from where we're at right now. I was just looking at the bonds, and we could be looking at what the 145. Oh God, put the glasses on here. Like the low 145 area, 145.24, which is a couple ticks below the current low, is the 618 retracement of this last leg of the rally. The 10-year, we went kind of through that same level. I want to say that is at 132.13, just of the last little rally, basically. So we're already kind of through those levels. We are seeing some possible C equals A measurements off the highs at 132.10 plus on the 10-year. Current low is 11. Maybe you're supposed to have a little bit of a long position with a fairly tight stop right now. And I think I'm a little bit early again. The volume has really dropped off. On the downside, really, the base of the previous fourth wave in the bonds is all the way down at 144.31 to 145.04. And in the 10-year, it's all the way back down at, oh my God, 131.26. So another half a point in the 10-year from here. I don't know, we don't want to see too much damage in front of these auctions. Like I've spoken of before, the dealers like to see a little bit of downside. They don't want to see a panic sell, because then nobody shows up to buy these things and the dealers are wearing them. I don't think they're real happy with this thing now, because we did see a backup. I don't think a lot of hedging went on. Today's the first really decent volume day, so today might be the first day that, like this morning, we saw a lot of put buying. And we saw a lot of selling, obviously, today with the 1.2 million 10-year contracts today. So we did see some hedging finally today. Maybe that gives us the impetus to drive the short covering after we get through the 30-year tomorrow. So, okay, great. Got a game plan. See you tomorrow. Have a great night.